Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about FactSet Research Systems Inc. quarterly report. FactSet Research Systems Inc. market capitalization of $11 billion is materially smaller than most of its industry peers of roughly $69 billion. FactSet Research Systems Inc. trades at a lower price-to-earnings ratio of 18 times and a higher price-to-book ratio of 4.94 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that most investors have already participated in the industry, leaving limited opportunity to uncover undervalued stocks. As this company belongs to the financial data and stock exchanges industry, the liability ratio is less meaningful for valuation. Investors should instead focus on return on assets, ROA, and return on equity, ROE, to better assess the company intrinsic value. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. FactSet Research Systems Inc. offers a wide range of businesses and services to the investment community. The company provides data, products, and analytical applications that support various aspects of investment research and portfolio management. These include workstations, portfolio analytics, enterprise data solutions, and managed services for data, performance, risk, and reporting workflows. The company's subscription-based financial data and market intelligence enable clients to research investment ideas, analyze, monitor, and manage portfolios. Its solutions cover the entire investment lifecycle, from investment research to trade execution, performance measurement, risk management, and reporting. FactSet also offers services through a configurable desktop and mobile platform, data feeds, cloud-based digital solutions, and application programming interfaces. The company operates globally, serving various types of clients including institutional asset managers, bankers, wealth managers, hedge funds, corporate users, and private equity and venture capital professionals. With over 40 years of experience, FactSet has established itself as a leading provider of financial digital platforms and enterprise solutions for the investment community. The stock price of FactSet Research Systems Inc. has experienced a significant decline of over -37.84% in the past year, primarily driven by a series of news events throughout 2025. The company's Q3 fiscal 2025 earnings miss and disappointing fiscal 2026 guidance were major contributors to this decline. On September 18, 2025, FactSet reported third-quarter earnings that missed analyst expectations, with adjusted earnings per share of $4.05 below the Wall Street estimate of $4.13. Furthermore, the company's fiscal 2026 adjusted earnings per share guidance fell short of the average analyst projection, leading to an initial drop of 4.1% in the morning session. The stock continued to decline throughout the year, with a significant drop of 41.85% by mid-December and 45.21% by early November. In addition to the earnings miss, investors were also concerned about margin compression and a slowdown in demand. Despite reporting fiscal 2026 earnings that exceeded analyst expectations, FactSet stock declined on December 18, 2025, due to higher amortization of intangible assets, increased employee compensation costs, and elevated technology and third-party content expenses. The weaker-than-expected Q4 fiscal 2025 performance and FY26 guidance also contributed to the decline in stock price. The CEO transition was another factor that added to investor uneasiness and the overall significant stock price correction from 2024 to 2025. Overall, a combination of disappointing earnings, margin compression, and leadership changes have led to the significant drop in FactSet's stock price over the past year. Revenue growth and decline can be attributed to several key factors. On the growth side, the Americas segment saw a significant increase of $28.9 million, or 7.8%, from 2024 to 2025. This was largely driven by subscription value, client and user additions, as well as sales to existing clients. Additionally, workstations and data solutions contributed to revenue growth in various regions. In the Americas, organic revenues increased by 6%, while in Asia-Pacific, it rose by 8.3%. These factors collectively contributed to a notable increase in overall revenue. On the other hand, the EMEA segment experienced a decline of $108 million, primarily due to a decrease in operating margin from 33.6% to 31.6%. This significant drop in operating margin was a major driver of revenue decline in this region. The net income of the company experienced a slight increase of 1.8% from $150,022,000 to $152,580,000 over the given period. However, this growth was not reflected in the operating profit margin, which decreased by 2% from 33.7% to 31.7%. The operating income remained relatively unchanged at $192,071,000. The primary reason for the decrease in operating profit margin can be attributed to higher expenses such as amortization of intangible assets and increased employee compensation costs and technology-related expenses. Despite this, the growth in revenues partially offset these increased expenses, contributing to the overall net income increase. The company's financial performance indicates a steady improvement in its ability to generate cash from its core operations. The data shows that the net cash provided by operating activities has increased significantly over the past year. In 2025, the company generated $121,284 in positive operating cash flow, a substantial increase from the $86,372 recorded in 2024. This upward trend suggests that the company's business model is becoming more efficient and profitable, enabling it to generate sufficient cash to meet its financial obligations and invest in growth opportunities. The company's debt level and interest expenses have undergone some changes in the given period. Despite conflicting information across multiple pages, it is clear that the company's debt level has increased slightly from August 31, 2025 to November 30, 2025. This increase is evident in the slight rise in long-term debt from $1,368,260,000 to $1,368,738,000. However, a closer look at other data reveals that the total principal amount of debt remained unchanged at $1,375,000 during this period. Furthermore, the company repaid significant amounts of debt, including $125 million of the 2025 term facility and $1.0625 billion of the 2022 credit facilities. In terms of interest expenses, there is a clear indication that they have decreased by 6.7% from 2024 to 2025. This decrease in interest expenses is evident in the reduction in interest expense from $14,400 in 2024 to $13,385 in 2025. The financial performance of various regions has been analyzed based on the extracted summaries. In terms of regions that performed well, the Americas stood out with a notable increase in revenue from $367,242,000 in 2024 to $396,176,000 in 2025. On the other hand, there are two segments where clear performance information is lacking: EMEA and Asia Pacific. Unfortunately, no specific data on revenue or expenses for these regions was provided, making it difficult to assess their financial standing. Management is emphasizing a strategic approach to grow the company's global business. The focus is on three key geographic segments: Americas, EMEA, and Asia Pacific. To achieve this growth, the company is prioritizing organic expansion, aiming to increase revenue and annual subscription value, ASV, across all segments. The core pillars of their strategy include expanding data offerings and delivery capabilities, embedding deeper in client workflows, and innovating with AI. This approach is expected to drive recurring revenues and generate positive cash flows. Management believes that ASV is a key indicator of the company's ability to grow recurring revenues and achieve financial stability. Overall, the company's outlook and strategy are centered around organic growth, innovation, and expanding its presence in key markets. The company's financial activities involve both acquisitions and divestitures. In terms of acquisitions, the company repurchased a significant number of common stocks under its share repurchase program in 2025, totaling 478 million shares. Additionally, it acquired shares from holders of stock-based awards to satisfy withholding tax requirements due at vesting, amounting to approximately 21,374 shares. On the other hand, the company engaged in divestitures by terminating the 2022 credit agreement on April 8, 2025. This move marked a significant shift in the company's financial strategy, allowing it to reevaluate its debt obligations and potentially explore new financing options. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In terms of dividends, the company paid out $1.10 per share for the first quarter of fiscal 2026 and $1.04 per share for the same period in fiscal 2025. This indicates a consistent commitment to rewarding investors with regular dividend payments. In addition to dividend payments, the company has also been actively buying back shares. In 2025, it repurchased 478 million shares worth $139.9 million. Furthermore, the company returned a total of $181.3 million to stockholders in the form of share repurchases during the 3 months ended November 30, 2025. This demonstrates a clear strategy of reducing the number of outstanding shares and increasing earnings per share for existing investors. Overall, the company's actions suggest a strong focus on shareholder value creation through both dividend payments and share buybacks. That concludes the financial summary for FactSet Research Systems Inc. Feel free to comment below, and I will be happy to answer them when possible.